But you do think that this could go on for a while?
The analogy I've been using is the Netscape IPO. And if you compare that to the ChatGPT release, we are tracking out through what we'll call mid-1998 or so. And obviously that bull market went on another 2 years. And that's not to say what happened then is automatically what's going to happen now. But it does contextualize what's going on. So do I think it can go on? No one has told me that it's not. There's no slowdown in CapEx spending. There's no slowdown in orders. Demand is still there. The technology is still being utilized throughout corporate America.
And getting better.
And, well, of course, because right now, I mean, it's not the best. So I think there's room for improvement, both from a technological standpoint and also a productivity standpoint. And that still lays in the future.
Yeah. We're definitely going to be having our eyes peeled for use cases coming beginning next year.
A week ago, though, NVIDIA debuted or mentioned a new AI physical chip, right? So, I mean, there's a race there. Will they be a potential winner there, or will it be Tesla? Because all I hear about is Optimus is going to be a grand slam.
We think they're both going to be winners in different respects. I mean, with NVIDIA, the opportunity for physical AI is actually threefold. Not only is there silicon actually on the robot, you have the data center next to the factory, essentially training these robots, as well as digital twin infrastructure. So we could actually think that physical AI is the biggest opportunity of all the waves of adoption for NVIDIA, larger than enterprise AI, larger than the cloud wave that's going on right now.
Okay, let's talk about this networking demand, because you say networking is the new battlefield. What does that mean?
So the unit of compute is no longer the chip. NVIDIA's latest chip is 72 GPUs or AI chips linked together to act as one GPU. And these chips are approaching clusters of 1 million in a data center. So the real moat at scale is actually the interconnect. It's almost as important as the raw compute. And so this is where the battlefield is. We don't think it gets enough attention. NVIDIA's data center business, the networking component of that is now the fastest growing component, as we saw from their earnings results next week. But they're up against competition from some of the open standard players. So the Broadcoms, Amphenol's, Credos, A-Labs of this world.
Broadcom, obviously, it's a $1 trillion company. It still gets very little press. I think they report this week. And so is it like the sleeper name? It feels like in the $1 trillion club, it's the one no one talks about.
We think Broadcom definitely deserves more airtime, because not only are they the leader in Ethernet networking, they're present in 7 of 8 of the largest training clusters in the world, but they're also the leader in custom ASICs. So they're helping these hyperscalers develop their own chips for them. So as these clusters of AI chips scale in data center, they actually get a double benefit, and we don't think that's priced into shares.
Amphenol, I think, is in the top 10 movers today. Credo, don't even remember. I sold this one too early, okay? I'm going to get back in. But the bottom line is you like these, and you look like about a 3-year period or so, right?
Yeah, 3 to 5 years.
3 to 5 years.
And that mega tech love, though, isn't really extending to NVIDIA. It posted its 5th straight negative session. I know, not really that negative, barely, but still, we call it that. Recall yesterday it closed below its 50-day moving average for the first time since May. That's actually a key level some traders look at when watching momentum.
All right, I hope you're all doing great today. The main piece of NVIDIA news today is from the information reporting that Google is in talks with some small cloud providers to rent Google TPUs alongside NVIDIA GPUs. At this point, I am hesitant to believe anything that the information reports having to do with NVIDIA rumors, as they've been very unreliable in that regard over the past year or so. That being said, even if the report is correct, I do not view this as a major deal breaker for NVIDIA. I think there is definitely a market for custom ASICs like Google's TPUs. That being said, it's important to remember that custom ASICs are optimized for very specific workloads, whereas NVIDIA's GPUs are general purpose. To give an analogy, think of an NVIDIA GPU as a Swiss Army knife and a custom ASIC as a scalpel. The NVIDIA GPU is going to be much more versatile across a wide variety of tasks, while at the same time, it is not going to be the most efficient for certain tasks. On the other hand, the custom ASIC will not be very versatile, but it will be highly efficient for the specific task that it is optimized for. And so from the perspective of a cloud provider, it is in their best interest to continue offering general purpose compute from NVIDIA, as that will allow them to serve a wide range of customers. At the same time, there's also room for custom accelerators to succeed as well, as there is such strong demand right now. And so I do not think that this report from the information is a major concern for NVIDIA. Looking ahead, we have 2 NVIDIA events. First, NVIDIA will be at the Goldman Sachs Technology Conference on Monday, September 8th. Last year, when Jensen spoke at this event, the stock rallied as he spoke about strong demand. I don't know what will happen this year, but I'm saying that this event is important for the stock because the event is directed at the financial community. And then we have NVIDIA GTC in Washington, D.C. this October with a keynote from Jensen on the morning of October 28th. Jensen told us on the earnings call that he is anxious to share more details about Rubin with us at GTC. As a reminder, Rubin is currently in fab and on track to launch in 2026. Rubin will be the first NVIDIA architecture wherein each chip is new and revolutionary. This includes the Vera CPU, which will be NVIDIA's first custom CPU containing 88 NVIDIA Olympus cores and built to work in lockstep with NVIDIA GPUs. And while we're expecting Rubin to launch in 2026, we have production of Blackwell Ultra ramping very quickly right now. This is part of the reason why there's a strong acceleration in NVIDIA's Q3 revenue guidance of $54 billion compared to their Q2 revenue of $46.7 billion. As I've said many times over the past couple months or so, I really like the setup for NVIDIA through the remainder of this year, as we should have a convergence of multiple positive factors. Blackwell Ultra is ramping quickly, as I mentioned. Additionally, we should start to see revenue from certain sovereign AI deals show up either in NVIDIA's revenue or guidance on their Q3 or Q4 reports. And I'm also expecting a surge in compute demand as a result of agentic AI being rolled out to the general public. I think this surge in compute demand will extend well into 2026. On the earnings call, Jensen seemed to agree with this idea because he said that he thinks reasoning agentic AI will be a major growth driver in 2026. I seriously think that NVIDIA still has a lot of runway ahead of it over the coming years. AI demand continues to increase. New use cases continue to be developed, and I don't think we have to worry about an AI bubble or customer concentration anytime soon. Let me quickly give multiple reasons why this AI revolution is different from the dot-com era, and then I'll briefly address customer concentration after that. I'm just going to rapid fire multiple reasons why this is not the same as the dot-com era. First, the largest spenders in this AI revolution are extremely well capitalized with the deepest corporate balance sheets on the planet. Second, the largest spenders are not investing in AI infrastructure aimlessly in the hope of eventually finding a use for it. Rather, they already have multiple use cases for it, and they're investing heavily in an attempt to meet very strong demand from their paying customers. And that brings me to the third point. These companies are already seeing a direct ROI on their AI investments. Just take Microsoft and Amazon, for example. They told us this earnings season that they have hundreds of billions of dollars worth of backlog that they have to deliver to their paying customers. They're already seeing a direct ROI on their AI investments. Fourth, the largest spenders in this AI revolution are primarily funding their investments by means of their own free cash flows. That was not the case during the dot-com era. And fifth, the development of new use cases and mass public adoption of the technology is going to happen much faster than it did in the early days of the internet, because the internet is already here. We don't have to wait 10 or 20 years for it to happen, because it's happening at this very moment, which drastically reduces the risk of long digestion periods like what we saw in the early days of the internet. For all of these reasons, this AI revolution is fundamentally different from the dot-com bubble. Will there eventually be an overbuild of capacity? Perhaps at some point, but I think we are likely at least 3 to 5 years away from something like that happening. And on the topic of customer concentration, I'll just briefly mention that the large CSPs, such as Amazon, Microsoft, and Google, provide cloud services to millions of customers. And so in order for these companies to slow down their AI build-out, we would need to see a much broader decrease in AI demand. And so I don't think that customer concentration is a major risk for NVIDIA at this current moment. The three companies I just mentioned are buying AI infrastructure to then provide service to millions of customers, which I think actually reduces the risk of customer concentration. All things considered, I continue to be bullish on NVIDIA long-term. And I think this company will be worth substantially more in the future than it is today. Blackwell Ultra is ramping fast. Rubin is in fab and on schedule to launch in 2026. Then we're expecting the launch of Rubin Ultra in 2027. And after that, we have Feynman in 2028. We have a clear data center product roadmap extending into 2028 with a new generation product release each year. Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030, meaning he's expecting growing AI demand and an expanding total addressable market underpinning all of this. For all of these reasons and more, I seriously think that NVIDIA still has runway ahead of it, and I continue to be bullish on the long-term future of NVIDIA. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.